All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and it is Friday. It is the end of the week, September 6th. So, what I normally like to do on the Friday videos is to recap the price action for the week, kind of just give my overall thoughts for the week, and of course thoughts going into next week, and what I'll be concentrating on or what I'll be thinking about. I always do my research a lot over the weekend, so I'll kind of share with you what I'll be looking at, basically. But for the week, pretty decent week performance. SPY was up 1.9%. Diamonds just about the same. Small caps underperformed again, only up 0.5% for the week. It's kind of tough in a strong, in a week where the indices were up. The Qs outperformed, even though I think the Qs finished in the red today. Small caps underperformed again today, but we'll get into today's performance in just a second. EEM very strong for the week, up 3.4%. We actually saw a decent buy order come into one of the emerging market ETFs. Let's see if I can find this really quick. IEMG. Let's see. Let me put in 500,000 shares. So it looks like there was some interest. 2 million shares that were bought, which is a decent amount of money, right? So what is that? About $100 million, I think. So decent buy order. That was 2 million shares of IEMG. If you're not familiar with that ETF, it is very similar to EEM. It's the core emerging markets for iShares, and the maintenance or the management fee is a little bit cheaper in this ETF versus EEM. But so some buying going on. These flows, I'll tell you, for ETFs, which I analyze every day, they just have not really been showing much going on. The most exciting thing that's been going on has been inflows into fixed income, right? So, and not only TLT, which has been probably seen one of the biggest inflows of any ETF 2019, but also a lot into corporate bonds. Lisa Abramowitz of Bloomberg sent out a couple tweets today. You can kind of see what she's talking about. A lot more money going into bonds and bond ETFs versus equity ETFs. So, just very different. And these are flows that I analyze on a daily basis, kind of just looking to spot trends. And one of the things, I wasn't going to talk this much about our international markets, but it is kind of interesting. There's just not showing any, not very many interest. A couple months ago, we saw a lot of unwinding of emerging markets and a little bit of international developed markets. But since that unwind that happened a couple months ago, a few months to a couple months ago, depending on what area, there really hasn't been much money going back into that group. So I don't know. That's kind of why I think this order is interesting. So I'll continue to watch to see if we see any major kind of flows there in ETFs. Just to kind of round out the week here. Also, EFA, which is international developed, was up 2.5%. TLT, GLD both took a breather this week, both down for the week, down 1%. Even though TLT came back and finished pretty strong after, I think, had a down 2% day yesterday, but did recover a little bit and had a little bit of momentum comparatively to the equities. For the week in sectors, really a hodgepodge of groups. Remember, things were kind of driven a little bit by that, by the headline midweek, about China and the U.S. possibly sitting down again in October, which was kind of the catalyst for the week. Although the under the hood indicators, for stocks, really started to kind of change. I would say the beginning of the week to midweek, right? So even though that was kind of the catalyst, like for example, if you look at the advanced decline line for the S&P stocks, hitting an all-time high. So I believe that's an all-time high, or at least a one-year high. But we look at these things to kind of confirm trends or pick up divergences, and the advanced decline line making new highs. I mean, that's confirming that, you know, that's there's good things going on basically underneath the hood of the S&P 500, right? That's what we want to see. So I think that's a good sign for the market. Let's go back to just sectors, but yeah, oil services, which has really gotten beaten up this year, up 5.8%. So I think a little bit. My hunch too is a little bit of short covering in some of these areas that maybe shorts were kind of positioned for a while. They do see snapback rallies when you get a little bit of a headline going on. Right, if you look at steel names, which were up 2.9%, that's been an area that's gotten beaten up pretty decently. Semiconductors up 5.2% for the week. Really, this is another thing that I kind of like, that I think is a good sign for the overall market. We're almost back to all-time highs for the semiconductor ETF, which is pretty. I think pretty significant, right? A lot of people who are students or like Dow theory, they look at the transports to make sure they confirm with the industrials, right, in the Dow. But I think it's these days semiconductors are more important than transports. I think that is our new kind of confirming the trend for me anyway. I put more weight behind the semiconductors than transports these days, but. Again, that's my own personal philosophy. But they did very well this week, one of your best performing groups. Uh, Tech also did well, industrials did well, financials did well. What didn't do well this week? Interesting, solar was on the bottom of the list. Also, biotech did a little bit better towards the end of the week, but in the beginning of the week, just not so good. And we went over those charts in the beginning of the week in one of the videos, and just showing that they're on breakdown watch, this group. The utilities and some of the defensive areas took a break this week. The utilities, after being up big earlier in the week, only up 30 basis points. But if you look at this chart too, I'm in the XLU ETF. Had this huge day. I think this was on Monday, and then kind of has been given back some of those gains. They're probably a little bit too far too fast. There were some big inflows into a couple utilities ETFs earlier in the week. What else? But yeah, gold miners top of the list in terms of declines, giving back a lot of those gains over the last couple of weeks. Really tough to find a trend here in international areas other than, as I mentioned, emerging markets did pretty well. Things like, look at New Zealand, was up 7%. South Africa was up 6%. Mexico up 5% for the week. South Korea. So interesting, you would think it would be all China related, but some of the other emerging markets actually did pretty good. That's why we do the review at the end of the week, just to kind of check to see what were the actual performers, because sometimes they're different than you might actually think. So let's go over today's performance. We'll go over the technicals and the S&P. So this looks fine, right? Daily chart. Other than this, you can see this downward trend, this trend line that I can't speak today. Maybe because it's the end of the week, and I'm a little bit tired. But you could see this trend line that I've got drawn. It looks like we're kind of butting up against this, but there's always something, right, that you could kind of find a positive or a negative in the S&P chart. But bottom line is we did get out of this range, which I think is very important. Now we're just going to have to see if we can kind of follow it up, right? And we could see a whole bunch of different scenarios from here. I always like when I always blame it on Twitter, but I see somebody on Twitter like, oh yeah, we're going to go this, and this. Like, really? I don't know. I don't know. I really try not to make too many predictions, but I think we could either the one thing, and I send out, if you're not a member of Tribeca Trade Group, I send out the S&P chart and a couple of the smaller time frames in the S&P. So I send a whole note out in the morning. I don't put that on regular Twitter, but 3013 I think could be where we're headed to in the S&P at some point. When this happens, I don't know, but I do think that we will take this out. I could, like I said, there's could be a number of scenarios before we take that out. Maybe we come back and check back, which would probably be a really good place to add risk, kind of coming back to this 29.35, the scene of the crime, and then moving out. So I think that's possible in the in the next couple weeks to the rest of the year. But yeah, I mean this day was kind of very frustrating, I would say, day to try to trade. Sometimes you just have these choppy days, right? And there's not much going on. What I try to do is to the trading room is just basically say, hey, try not to overtrade, and don't short a dull market, right? Even though because we've been moving pretty nicely this week to the upside, and then sometimes when we stall, I see sometimes traders, they're like, oh, well, I should be putting on some protection and some puts. Now, if you have a signal, right, and you see something that you've got a good reasoning behind, hedging or putting a short on, but sometimes traders just trade to trade. And I don't agree with that. I've kind of was like, hey, I think we just have a choppy day after Powell spoke, and I really didn't do much this afternoon. And I think sometimes that's the best thing that you could do. I know everybody wants to find the next trade, and to find the trade that's going to really work. But small caps kind of broke down here at the end of the day. They were also very choppy. The one thing that's still kind of concerning is why this group isn't leading rather than lagging. Like I said a few minutes ago, that small caps did not lead for the week. Again, you could break this apart and say, well, maybe it's this group or it's that group that's in the IWM, but it just feels like something is not right. The fact that they just cannot get going and cannot sustain a bounce. So that's one of the things that I don't like in the market, right? There's always some things that you like, some things that you don't like, and then you kind of put it all together. So, a couple other interesting things at the end of the day is, it just seemed like people, even though we bounced this week, it just feels like a couple things are not right still. I found this name kind of at the end of the day, but Adobe, just a lot of names sold off. We're kind of giving back some profits at the end of the day, and not just like a little bit, but I think this is, pretty significant. I heard Kramer talking about Salesforce and a couple of the other software names. It just seems like something's not right too. I don't know if it's a valuation thing, but Salesforce had an exceptional quarter, and people are just not, funds are not buying it right now. So maybe this group does need a decent washout. I mean, and you look at another name, Coupa Software. This name was up to 156, so pretty decent ranges. So I don't love when this happens to stocks, when they start to go higher like this, hit 156, and then fall all the way down to 148. To me, I don't know. That's a little bit more than I think should happen. Like, it's okay, I think, for stocks like this. I was watching this OLED. I think this is fine, right? Sometimes you go a little bit too high in the beginning of the day and you give back some gains. Like, that's okay, but for stocks to get like hammered like that, I think is a little bit odd. Then if we go over to the same thing with Microsoft, got hit a couple times too on like no news. Again, I don't own the majority of the names that we're talking about here, just kind of going over. The FANG stocks, I just wanted to comment about these for a minute. I've kind of been trying to stay away from, even though, like, again, I like Amazon. I hold a little bit of Amazon in my long-term account, but it just seems like one of the things that's going to be dogging them. And as soon as they put together a couple days of a rally or an up move, then there's a whole bunch of headlines about regulatory stuff going down with this group. So, and we've seen this now a couple times where these names have tried to get going a couple times, and the regulators are all over them. So I think, for me personally, other than like just a quick trade where you're basically, playing a situation where sentiment gets really washed out in like an Amazon or something like that, you could look for a bounce trade. I was joking around in the trading room earlier this morning how now everyone seems to be a sentiment expert, where they think they can like, time sentiment perfectly. I get it. We've been in a sideways market, so really trying to find when sentiment gets washed out. There are better buying opportunities then, but you know, that's you're never gonna just like timing the market. I don't think you're gonna be able to time sentiment perfectly either. So now you're trying to time a couple things, right? You're trying to time the market, and when sentiment gets really washed out, I don't think that that's like the best. The best way to kind of trade and invest over time is to only wait until markets in turmoil special goes on. So so what am I getting at here? I think that we still have a market that is very difficult to trade and to hold positions. Still kind of more on the trendless side. So again, I like to say this term a lot, but cautiously optimistic. I am cautiously optimistic and more on the bullish side than anything else. But it does look like a very dicey environment to continue to be consistent trading wise. So let me go through. So that's the negative. Just to kind of see names get washed out a little bit too much, and some prior growth names really kind of losing market leadership, which I think they've been doing that for the most of 2019 in regard to the FANG stocks. But let me go through a couple names that did work. Snap we saw, which I talked about, in last night's video. I talked about how I got long some Snap, all kinds of weekly calls going up. So this worked pretty well. This was up 4.7%. I would imagine we did see a lot more calls, but I would imagine some were being rolled out. I think this could go a little bit further before it hits resistance. Somebody asked me about that on Twitter. A couple other names. Look at this BSX, right? Now, this is a name that we've seen some call activity. Didn't close on the highs, but look at all the consolidation. So this is something I like to see, these types of patterns where you've got a massive amount of consolidation. The moving averages are all coiled up. We got 3 moving averages intertwined together. So I think this is one of the nicest charts out there, Boston Scientific. So I talked about Abbott yesterday, but I think this group is still, a group that's showing relative strength. You could see IHI made a 52-week high. Another name that I like that I'm watching, and I actually did take a position in this today, is McDonald's. It's not there yet. It's got to break 221. Again, really didn't do much today, up 25 basis points, which again is maybe a little bit better than some other stocks that crumbled at the end of the day. But it's on breakout watch, McDonald's, and that's why I just went in a third of a position when I kind of get into a position a little bit preemptively. So last thing to talk about today, which I forgot to talk about in the beginning of the video, was the VIX. So this really kind of, and I'll try to just make this brief because the video is already about 18 minutes long for the day. But interesting, the VIX fell 7.8% today. Now, normally when you see this, normally stocks are going up. Stocks did not go up on this. So I don't know if this just had to do with the Powell speech that, they were anticipating, the jobs report. Sometimes once those events become known, volatility does subside. But I thought this was a little bit weird. Also, something that just didn't fit right, or doesn't sit right with me. The VIX going down 7.8%, and normally when that happens, you would see probably like S&P and the Qs. Well, keep in mind the VIX is just for the S&P, so let's just keep it simple. But the S&P would normally be up like about 1% or even more when you've got the VIX down 7.8%. So something doesn't sit right with this. And this is frustrating, and I just wanted to talk about this for a minute. You have to really be careful about what you're holding. And I've been saying this now for months, that stock trading to me is a lot easier than option trading. When you're in a declining volatility environment, And if you're not familiar with this concept, I would say that try to at least Google it, and you can you don't have to read a whole book, but you should be familiar with option pricing just a little bit, enough to get by, to know that one of the components of option pricing, right, in the Black-Scholes model, which you don't have to fully understand, is implied volatility. So all things being equal, if you own an option position and the stock doesn't move, you don't have big theta decay, but implied volatility goes down, what happens to your option price? It goes down. So this happened a lot to, I think, people today. This is called vol crush. When volatility really comes out of the market, and if you're holding those option positions, embedded is a volatility component. So if the stock doesn't move and everything else doesn't change, the price of the option will go down pretty decently. Now, if you're holding stock, you don't have to worry about this, right? So one of the things somebody mentioned to me on Twitter, and again, I don't, I'm always trying to figure this out. I'm never one of those people who are like, oh, it's this way or it's that way, right? No one knows all the answers, and as soon as you figure that out, the better you are. But somebody said, oh, well, that means if the VIX goes down like this, well, probably stocks are going to sell off. And they said to me, well, look at the situations where it's happened. It happened in December. It happened in May. And they mentioned last year. They said, well, it happened October last year too when the VIX got low. Now, I don't necessarily agree with that. The VIX was about the same level, a 12 to a 14, for 6 months. So you're going to tell me here, because the VIX was low, that's why stocks sold off? I don't think that's really the how it works. Sometimes when you get something like this, when the VIX really goes a little bit too low, sure, maybe you can make an argument for that. But I don't think, and I'm happy to entertain any questions. You can email me and so forth. But just because the VIX is low, that doesn't mean that you're going to get a snap back in volatility and stocks are going to sell off. The VIX can stay low for a long time. Look at it back here. We had basically a whole year of the VIX staying under 14. So again, if you were trying to play that game of saying, "Oh, the VIX got low," you would have lost for months and months and months. So just be careful of that too. I'm not saying that just the VIX could go all the way back down to 14, 13. So anyway, I'll leave it there. I know that's very in depth, but yeah, kind of interesting today that those things did not confirm. The VIX going down today, and stocks also basically didn't do much today. So kind of odd. So I'll leave it there. More to go for this weekend. What I'm going to be kind of looking, as normally I do, is I dig into to charts for the weekend, and then what we'll do is we'll rebalance the Tribeca Trade Group tactical portfolio, which is a portfolio of 20 stocks that we rebalance once a week. Again, just all stocks, no options in that portfolio. All right, guys, have a great weekend. See you on Monday.